So, when price breaks through a high-quality level like this, we can confidently say that the market structure has shifted, and the momentum is now favoring the sellers. This condition is known as a change of character, signaling a shift in market sentiment. The change of character is valid except in two common scenarios. Sometimes the market structure conditions make these changes invalid. Let's break this down step by step. Right here, we have a major swing low that triggered this breakout. A break below this level might seem like a valid change in character. However, if you look at the left-hand side, you'll notice something crucial. This level aligns with a significant area of liquidity. Here's the deal. Many traders previously opened long positions at this level, placing their stop losses just below it. What does this mean? A massive pool of liquidity is sitting beneath that level, waiting to be tapped. Now, smart money knows this. To hunt these stop losses, they often push the price lower, sweeping the liquidity before driving it back up in the same bullish direction. Here's the key takeaway. When a major swing low sits in a liquidity hotspot, breaking through it is often just a liquidity grab, not necessarily a signal of a market reversal. In this context, we can't classify this break as a valid change in character. If the price re-enters the range after the liquidity sweep, it creates an excellent opportunity for a long position. Why? Because the overall trend remains bullish, the sell-side liquidity has been engaged, and the next target is the buy-side liquidity. As smart money traders, our goal is to enter after the stop losses are taken out, when the real move begins. Now that's just one piece of the puzzle. Let's talk about another concept that can also invalidate a change of character: the mitigation of fair value gaps. As a smart money trader, identifying FVGs should be one of the first steps you take when analyzing a chart, because these zones often act as magnets for price. In most cases, before continuing its trend, the market pulls back to fill these gaps. This is why FVGs are critical zones to watch. They're most effective on intraday timeframes, such as the 4-hour, 1-hour, or even smaller timeframes. Now here's where it gets interesting. Let's go back to the earlier example. Look closely at the left-hand side, and you'll spot an unmitigated fair value gap sitting just below the major swing low. In scenarios like this, price often retraces to the FVG zone to fill the gap. This pullback doesn't indicate a true reversal. It's simply the market rebalancing itself. The bottom line? Always check the left-hand side of the chart for unfilled FVGs. This helps you distinguish between a move that's just filling a gap and one that reflects a real shift in market sentiment. By doing this, you can avoid false signals and stay aligned with the bigger picture. With all being explained, let's move on to the next topic: supply or demand. Who is in control? Identifying the market direction is the first step in analyzing a price chart. The goal is to determine the trend and see whether buyers or sellers are in control. Trading in alignment with the dominant side increases the probability of success. How does the system work? The system operates on mitigations. When price mitigates a demand level, demand takes control over supply. Conversely, when price mitigates a supply zone, supply takes control over demand. I know it sounds so basic, but it all will make sense in a minute. Imagine the market is in an uptrend, forming a series of higher highs and higher lows. Each time price breaks structure to the upside with inefficiency, a demand zone is created. These demand zones remain unmitigated until price revisits them, offering ideal opportunities to trade with the dominant trend. However, if price breaks below a valid demand area, it forms a change of character. This signals two key things. First, supply has taken control over demand. And second, a new valid supply area has been established. From there, price continues moving downward, forming new supply zones until it reaches the next unmitigated demand area. At this point, a battle between supply and demand occurs. Sometimes this results in consolidation and a ranging market between these two zones. A break above or below the range will determine which side gains control. The next concept we'll explore is order blocks. But before we continue, if you're an experienced trader looking forward to getting funded, register with our trusted prop firm, Funded Next. Funded Next is one of the top-rated prop firms on Trustpilot that provides one of the lowest spreads and commissions in the industry. They offer a variety of plans for traders with unique services. If you're seeking a prop firm that genuinely supports your trading journey and provides financial needs, register with the link in the description to get a 10% discount with our exclusive code and experience their exceptional services for yourself.